but I have to ask it. Eggnog,
Okay.
yay or nay?
I'll be honest with you, yay. But
Yay?
yeah,
Okay.
better with whiskey.
I
for
think there's
sure.
a time and a place for it.
Exactly.
Absolutely. Oh, I'm sorry. That should have gone without saying. I assumed that you were.
Well, yeah, dude. Of course,
you
I
were
love.
drunkenomical.
No. Of course, no. I mean, I'm not gonna drink eggnog neat. You know what I mean? I'm gonna put some whiskey in there. Like,
Bold strategy, Cotton. But
what do you
like,
put in it? Like, what do you like in eggnog? Because like I know I've done Jim Beam before, but I like it better with Jameson.
I like an Irish whiskey because it's a little bit lighter.
yeah,
The eggnog's already bringing the sweet. I don't need more sweet
Yeah,
from the
I
bourbon.
don't need that
Which is
either.
funny because I'll also do it with rum, but only spiced over proof rum.
Oh, okay.
So like,
thanks for clearing that up. Yeah.
Sailor or Kraken.
You're not gonna do like a white rum with that thing, are you?
No. Well, in a pinch. Never rule it out, but like it's.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
All right, guys, and welcome back to Drunkenomics, the drinking podcast with the economics problem, coming to you new and improved, fresher and better than ever in 2023.
Something like that.
I don't know. Yeah, maybe we'll put a special effect over that. Maybe it'll just be my voice. You'll be the first to know because it won't be me.
Or both. Or both. We can do the rap form and your voice.
Absolutely. But guys, welcome and welcome back. If it's your first time here, let's put it this way. It's all of our first times here in 2023.
Yes.
So
hope
welcome.
you had a good, refreshing, happy New Year weekend and holiday season.
Absolutely. So hope you had a great holiday season. Hope you had a great New Year. Welcome to January.
Yeah.
And we have decided that the 18 mark on VIX for graciousness was just too low.
Just not reasonable. Yeah.
It just wasn't reasonable in an unreasonable world and unreasonable economic conditions. So we have declared in honor of 2023, the new benchmark for grace will be 23.
Exactly.
Unfortunately,
It's under 23.
fortunately,
I don't know, dude.
it returns me, James Goldwater, to my preferred place as the less gracious host.
Is that-
and that makes Aaron Wong the.
I don't know.
I'm definitely working with Aaron Wong, but I don't know how to call him. What is this? It makes you
does that make me the more gracious host? Honestly, it feels weird. You know,
more.
That's so
Yeah,
weird. All year
that's right.
last year.
I haven't
it's like-
said it. Haven't said it in so long. I forgot how.
I know. Like, I mean, do we need to go to occupational therapy for that? I mean, come on.
We might,
Like,
or speech language pathologist.
Or yeah,
maybe.
or speech. Exactly.
All right,
Maybe
guys.
that's
So
the word I was looking for. But
we'll be editing in the Discord soon to reflect our current and more accurate titles. But of course, everybody, welcome Aaron Wong back as the more gracious host.
Woo!
And feel free to give him a shout out for that, returning to grace.
It's a little awkward right now, but I mean, eventually, maybe maybe I'll warm up to it.
By the time you hear this, and welcome him back to grace, just jump onto it. Like I said, or like I'm about to say, join us on social media in the metaverse. So that's Facebook and Instagram at Drunkenomical, DRUNKENOMICAL. And then in a separate one, so we don't get banned, you could also check us out on Twitter at Drunkenomical, DRUNKENOMICAL. Elon, you can't ban us.
We've distinguished our handles from both. Yeah.
They're not linked. They're two different.
Brilliant.
All right. But yeah, check us out on Twitter while supplies last. Obviously, if you don't see us on Twitter anymore, my workaround wasn't as clever as I thought.
Well, I mean, and honestly, like it could just be like a whole, a company-wide thing in general, right? But at the same time, we also have our burner account on LinkedIn, so you can,
absolutely
find us on LinkedIn, follow Drunkenomics.
Check us out
there.
there.
You can add us individually. We're open to that as well. So yeah,
we're absolutely open to being. Yep. So join us individually. Join us as the
Drunkenomics
podcast.
Yeah.
We're more than happy to see you wherever we see you, and of course, you'll see an invite everywhere except for Twitter at this point. You'll see the permanent invite to the Discord where you can interact with us and with others.
Yeah, and if you don't find it on Twitter, you can just like DM, slide into our DMs, whatever the saying is, whatever the young people these days are saying, and we'll just send you a link through the DMs.
Exactly.
To our Discord.
DM stands for Drunkenomics, for Drunkenomical messages, right?
Yeah.
That's what that is.
Yeah, exactly.
I just assume that's correct.
In case you guys were wondering, DMs don't mean direct messages. It means Drunkenomical messages.
Absolutely.
Like, I don't know where people came up with the other DM acronym. It just makes no sense. Yeah,
absolutely.
But anyways, before we go on any further, I should also say views and thoughts that I express don't express the views of my employers. I gotta do that every episode, but it's true. They don't reflect the views and thoughts of my employer nor clients that I represent. Because I do have another full-time job.
I'll go one further and I'll say that my views and opinions do not reflect Aaron's employer either, nor do they reflect mine. So yeah, everything we say is just us.
Yeah.
But I will say, and with the caveat that if somehow it is reflective of our employers, it is totally
purely coincidental.
It's coincidental.
Yeah.
We are not speaking for them.
Yeah, and also nothing is financial advice. Yeah, we're drinking, so when I say that I think the VIX isn't going to be under 23 for a very long time, that's not financial or trading advice. But I do actually think that. I don't necessarily think. I know I'm not on an island on this. I don't think that the beginning of this year is going to be necessarily let's just say a soft landing. To use the verbiage of a Federal Reserve.
We're still in the belly. I still think it's belly flop.
I still think it's belly flop too. It's starting to seem more or less like a soft landing because I don't know. That sounds pretty cruel to say, but just now I just saw a news article notification on my phone saying Amazon cutting 18,000 jobs. Is that what it said?
Well, that explains a lot. That explains why some of the things I've ordered haven't gotten here yet, which Aaron and I were talking about before, that I had something that was supposed to get here towards the end of 2022.
Same.
And they've delayed it and delayed it and delayed it. And it's just like, really? Yeah, no, I'm seeing it.
Yeah. Wow. Yeah. So, I think it's going to show that the labor market is tightening. And I think once the Fed apparently their bigger goal for 2022 that they didn't achieve was to reduce inflation, regardless of how much pain it's going to bring to the labor markets. And here we are. Here's pain in the labor markets. It's only gotten worse, right? All year last year was 5,000 jobs were getting cut, 4,000 jobs were getting cut, right?
Well, getting cut from major tech firms, which is a very interesting thing. So there's this idea. If you look at kind of the tech sector, has suffered, but the tech sector has also really outperformed in terms of stock value and earnings historically. Because let's look at one specific major tech firm that I've noticed, or at least I have not noticed to have announced any major layoffs. And that's Microsoft.
They haven't announced
Google
anything?
has, Amazon has.
Wow,
I don't think so. Now they have had to back off apparently the acquisition of Activision. Say that 3 times fast.
But that's also, higher interest rates could be a huge catalyst for that, right? If debt is going to be more expensive in the future, I'd be reluctant to spend $25 billion or however much it was I forget how much it was to acquire Activision, but I'd be reluctant to spend that too if I knew rates in the future were going up.
Okay, I guess Microsoft has. I'm seeing things that are saying that they've laid off about 1,000 this last year.
Yeah, but it's much more subtle than we're seeing on, especially look at Twitter. Oh my god, they're laying off half their force. 16,000 or 18. And then 18,000, and then on for Amazon, and then Facebook, and then Salesforce, right? All these different companies.
At this point, I'm just trying to get us banned from Twitter, but I'm going to say this: the only thing that has exceeded the percentage of staff laid off by Twitter is the loss in stock value of Tesla by percent, right? So it's
fair enough.
It's not good.
Yeah. So I don't know. I think that's what we're going to have to look forward to this year. I don't think the Fed, they did 50 the last time around, which I think, goes to show that they have no balls. Do you want to call 50 a jumbo rate hike? I certainly wouldn't in this day and age, but I think that's what we're going to look forward to this year is maybe a few cycles of 50 basis point rate hikes just to see if we get closer to a zero real interest rate, which is essentially inflation minus interest, or is it the other way around? I forget if it is, but I think it's
interest minus inflation.
Yeah. Okay, so interest minus inflation, that's the real interest rate. Right now, obviously, that's a negative number. The Fed hates seeing that. So what people want to see is,
and so should you.
Yeah,
as an individual. Yeah,
personally, if I'm trying to preserve my buying power, I hate that
because I have to spend, and in order to preserve it, because I don't want to see loss, I have to spend now, which drives inflation up. So again.
Yeah. So I think that's what they're going to try and see. If it's going to take 5 or 6 50 basis point, I don't think it will, but I'm just saying if it does take 5 or 6 50 basis point rate hikes, I don't think the Fed should let up. But that's just my quick and dirty outlook for 2023, beginning of 2023.
Yeah, I think my beginning of 2023, my outlook is pessimistic. It's very bearish. I haven't seen any evidence to suggest that I shouldn't be bearish.
Yeah.
But for me, I don't see a big crash. Mm-hmm. That's not what I see. I see consistent small to medium declines. Nothing big. I just see everything I see wilting. Right? It's not like it's just going to keep.
Yeah.
It just keeps.
And I
trending
think,
down.
Yeah. So I think to start out this year. This is a bull case for you being more gracious, which in other words is another fancy way of me saying that the bearish case for the outlook on this year, my bearish case is in agreement with yours. I don't necessarily think that it's going to be a great year. And I think at the beginning of this year, we're coming off, if you've been watching CNBC at all or any sort of financial news network, if you've been watching any of that in the month of December, you've probably heard the term tax loss harvesting or the terms Santa Claus rally. Right?
Yeah.
I think tax loss harvesting was the reason why there was no Santa Claus rally. And I still think we're in a pretty good, era of tax loss harvesting. So I don't necessarily think, if you want to harvest some losses in 2023, now's a pretty decent time to do it too. Right?
It would not be the worst time. Let's put it that way.
Yeah.
Tax loss harvesting is here's where I get weird. I love talking about taxes and different strategies that can be taken with taxes, especially when you can link them to securities or other incomes.
Yeah.
I love talking about tax credits and their benefits and their failures and their failures. I love it. It's because it's
you're a big tax nerd. Yeah, totally.
Well, it's all connected to how politicians, generally speaking, actually not generally speaking, specifically speaking, the tax code is a reflection of how politicians think they can make an economy work.
Well, it certainly isn't monetary
often
policy,
often without the input of economists, financiers, and accountants. So it's very, very interesting.
Dude, I'm so glad that we have all these brilliant politicians in office. Aren't you so?
Here's
Sorry, that was a gag.
Here's
I know.
What I'll say.
I didn't mean that at all.
I'm gonna say. No, I know you don't. Especially because I know you and I have both watched we've both watched The House.
Yeah.
We are supposed to have the 118th Congress or the 117th Congress sitting.
Do we?
Now.
Is that finalized yet or
no?
Wow.
And here's why. So this should be the 118th Congress is currently being sat, and here's my view for why. And I'm kind of surprised the markets weren't in bad shape today, but maybe it's because they got it out of their system yesterday.
Yeah,
but there is still no Speaker of the House.
I thought Jim Jordan isn't Jim Jordan going to be the guy, the congressman from Ohio?
No, because he has 20 votes, and what's his face out of and McCarthy out of California, the Republican, has 202 votes. And
why was I seeing Jim
Jeffries
Jordan?
has 212. So there's a very small block of rebellious Republicans, the Freedom Caucus or whatever you want to call them.
That's Jim Jordan.
And they will not vote for McCarthy. So they're all voting for Jim Jordan or what's his face out of Florida, Douglas maybe.
Whatever.
I don't necessarily care. But the problem is that the House can't be sworn in until they have a speaker. So the House can't be sat. Like now, the last time that it took more than one ballot to name a Speaker of the House was exactly 100 years ago.
Wait,
fun fact, it was 1923.
Wait, so okay, so help me out a little bit here, just because I'm not that well versed in politics.
Sure.
So, how many votes does a candidate need to become elected Speaker of the House? And don't they need to be for the majority party in the House? Doesn't it need to come from that party? So
the magic number, assuming everybody votes, is 218. But if people vote a non-vote, i.e. present or abstain, that number drops by one.
Oh.
And no, you don't have to be the majority. You don't have to be in the majority party. You could be
right now,
a centrist. If somehow the United States wasn't this weird country of two parties, and some guy in the middle showed up and said, look, guys, let's just get some shit done. Let's ignore party allegiance. Let's just do what's right. Let's govern this country, do what's right for the United States, and we'll work with both sides here. We're going to work from the middle. We're going to ignore both fringes. If some guy showed up and he got the support of the rank and file of the House and said, I want to be the Speaker, the two parties could abandon their majority-minority leaders and could elect a speaker from the middle. Okay, so but it's possible. Yeah. It hasn't happened in a while.
In other words, if a bunch of people did vote for someone, if a bunch of Republicans did vote for someone,
if six Republicans broke with their party and went and voted for the Democrats, the Democrats would have.
Oh, okay, cool.
And if 6 Democrats broke and went to the Republicans,
it would
take. It would take 16 Democrats breaking to go make McCarthy the next speaker. I could tell you which one. I could tell you neither one of those is particularly likely.
Yeah.
So,
okay, so
what I'd say is I expect markets to be down, or at least not moving particularly wildly.
Yeah.
But trending down as they watch a party that intends to govern from the House that can't govern itself. Right. So remember when I said in 2008 the biggest, most damaging thing to the U.S. economy wasn't. Or initially that like it had been trending down for 6 months, but it was when the federal government got up there and the vote to do something failed that the markets actually went into free fall. That's when they went, oh my god, no one's awake.
There's no safety net, or oh my god, yeah.
That's when everyone went, oh my god, no one's in charge. And right now, the only difference between 2008 and now is that. In 2008, they thought there was someone in charge. Now they know there isn't someone in charge. So the difference is perhaps we're not surprised by this incompetence.
Yeah. So I think a part of that was if you look at the sell-off into the end of the year, right? Like I said, the Santa Claus rally didn't happen. Part of that maybe might have been because of, oh my God, there's no one in charge. So this uncertainty.
Well, yeah, and that's another reason I think you saw that big debt ceiling push that pushes the debt ceiling off until September.
Oh yeah, I saw that.
It was this big move because I think Nancy, I think the Democrats, legitimately, and the Republicans that voted for it looked at what was coming and went, this will be bad, and it may be bad for several months. So we can't have no House in February when the debt ceiling comes up. So let's kick it down the road.
Yeah, because I mean, like, what's the point of I feel like the number one job of politics or a politician is just to kick the can down the road. That's it's making the next guy's problem.
Well, no, the number one job is to get reelected. The number two job is to kick the can down the road.
There we go. Yeah, exactly. In the event that number one doesn't happen, number two, make sure number two happens.
Feel free.
And if number two does happen and number one also happens, then make sure number two happens again.
Then continue to do number two. Exactly.
Exactly. But yeah, so it's that. I think it's the uncertainty as far as political risk goes that maybe kind of got everybody to like, hey, let's de-risk a little bit. And then of course, I think tax loss harvesting. It's no surprise to anybody that last year.
I think we absolutely saw a lot of that coming into December as well.
I mean, equities are down bad, right?
Absolutely,
everybody knows that. Bond markets, I think was something. Bonds are insanely complex. That's what's there's so many different types of bonds.
Absolutely,
they're priced differently. They trade differently. There's illiquid that has different pricing methods. It's so weird.
Absolutely, yeah. There's time to maturity, and then there's what you're trying to do with the bond. Like if you're sitting here, if you're sitting on a bond, and this is what when I historically, when I've taught economics to people, like when I have tutored economics courses, and I've said, this is how bonds work. I'll draw a basic graph, and then I start going, why would you do this? Because basically all your economics classes, your micro and macroeconomics classes are, why would you do this? Yeah. Because there's never a single answer. The answer is always, well, assuming this is what I'm looking at.
Assuming this isn't also going to change too, and as a result of that changing, that this also isn't going to change too, and this might happen, right? That's a big thing in finance too.
For me, it's always
constant.
Yeah, right. Ceteris paribus. But one of my favorite things is seeing that like light bulb switch when someone goes, oh, unless blank. It's like now you're getting it. When you can start saying like, why would you pay more than current face value
for a bond?
Yeah. And the response is like, well, I wouldn't. Okay, well, fair. But why might you? Why would you do it today if you thought something might change in the future? And it was, oh, well, if it has a good coupon rate and I expect interest rates to go down. Yep. Okay. Wow. And it's like, okay, well, price that in really fast. And how much more are you willing to pay? Because you believe that's going to happen.
Yeah, and then it's also
okay. Well, there's your.
And it's also okay. Well, what do you think is going to happen with inflation? Right, because there's index-linked bonds, floating rate bonds, right? So
absolutely,
why don't you buy a floating rate bond at par if you think interest rates are going to go up, instead of buying a heavily discounted bond or something like, or a bond with really nice coupon payments, right? So that's kind of the weird thing about bonds. But either way, I mean, bonds just in general last year kind of, they kind of had a rough year as well, just like stocks did. And and part of having a rough year is
there's always one good thing about having a rough year.
In all asset classes, every single asset class except for maybe commodities, right? Yeah. And the good thing about a rough year is you can harvest some losses, which is not necessarily a good
tax
thing.
Loss.
It's like, I don't know. I'm trying to think.
No, exactly. So, what I'll say is this: my view is anyone who sits here and says like, "Oh, well, you want to carry these tax losses to offset your gains? My response is no. You actually want to gain.
You do
on
want gains,
everything.
yes.
Because if you gain on everything and everywhere,
Who cares?
I promise you will have more in the end
Then if you harvest some losses, yes.
than if you have losers and losses, right? Now, at the same time, what I will say is it's not always convenient to have gain everywhere and to pay taxes on all your gain.
Yeah, because what if can you imagine if you're managing a large book of money and all of a sudden you sold some stocks and you bought other stocks, right? You sold some stocks for a profit and you bought other stocks. Now you don't have that much cash.
Yeah, you're
right?
not liquid. You have realized the sale.
You've
realized the gain, right? We've talked about
you sold to Apple.
We've talked about the difference Google historically between recognition and realization, right? So recognition is I'm holding my Apple stock. It has increased in value. I recognize
20% gain.
You could personally recognize that gain, but it's not taxed, and it's not taxed because you haven't realized the gain. You haven't made that gain real.
Once you sell
it becomes real when cash trades hands.
Exactly.
Right? So it's the same. We in accounting we talk about recognition realization in sales.
Absolutely, yeah.
If I sell Aaron my Xbox on credit, I recognize the sale. Aaron recognizes the sale. The Xbox has changed hands.
You haven't realized the sale, but
until Aaron pays me, neither of us realize the sale.
Exactly.
So when Aaron pays, or rather, I don't realize the sale because he doesn't necessarily have to realize the buy.
Yeah.
But for me, until I have cash, it's not real.
Yeah.
I can always come back and be like, "You never paid me. Give me my Xbox." Right. So there's that.
Yeah.
In stocks, in securities, it's the same thing. In commodities, it's the same thing.
100%. Yeah. Exactly. So if you buy a stock for $100, it goes up to 120. You sell it for a gain. And then you spend $120 on a different stock, and then that stock now becomes $90, right? But you hold it through the new year. Well, you still have to pay a $20 capital gain because you realized that $20 gain in the previous year.
Exactly.
So a lot of people, to kind of make sure they don't have to realize all those gains, they'll sell something that they lost money in, right? So maybe they bought a stock in 2021 that hit its peak back in 2021, and in 2022, like everything else, kind of sucked, right? And they had a cap gains distribution from these bonds that they held, or from other things, from energy dividends or whatever it is. They've had cap gains there. What they can do is they can sell another security that they lost a lot of money on and kind of offset those gains. So last year, because stocks and bonds, because pretty much every asset class was down, towards the end of the year, to make sure that you could realize as much losses to offset your capital gains, I think that's kind of what accelerated the sell-off in December. And I think that's part of the reason why the Santa Claus rally didn't happen. In case you're wondering what the Santa Claus rally is, apparently it's the last 5 trading sessions of the year and the first 2 trading sessions in the next year. There's usually always a slight rally called the Santa Claus rally. I don't know why it happens, to be honest with you. Maybe people are just optimistic. They get some Christmas money and they decide that they want to dump it into the markets. Maybe that's what it is. I doubt it, but it could be a reason.
Yeah.
But this year, that rally was pretty weak.
Or maybe you got your bonus, or maybe you got your check from grandma.
Yeah, exactly. Or
whatever it is,
stock purchase plan got you the shares, or whatever it is, right? Yeah.
So here's, but what was that fallacy we were? Not fallacy, but the logical issue we were talking about the other day, and it's in your CFA study guide. It's where I hold on to a stock that's losing value, but I won't sell it. The disposition
effect. That's what it is. Yeah. So that essentially, the disposition effect basically means a lot of people.
Yes.
When they.
I was blank.
Yeah. So it basically means like investors are generally, whenever they buy a stock and it goes down, or really anything, like any security, if they buy any security and it goes down in value, they're reluctant to sell it because they don't want to realize losses. So
I totally went blank on that one. That's
for some reason when you say
I blame the rum.
I blame the whiskey. So yeah, but I mean, like honestly, like hopefully, if I see it on a test, I can answer it correctly because kind of, my future kind of depends on it. Essentially,
so like tax loss harvesting is a way to make, at least the way I describe tax loss harvesting or the benefits of tax losses is that tax loss harvesting is a way of getting a benefit out of the disposition effect, out of using the disposition effect to your interests, right? But you have to overcome the disposition effect, right? So the disposition effect is I have 2 securities. One is making huge gains. One is loser. Which one should I sell?
Yeah.
But the reason people don't sell the loser is because the second you sell the loser, you lost money. You made a bad decision.
You've admitted that you lost money.
You admit that you made a mistake.
Defeat.
It's kind of, I forget who said it, but it's like, well, how does bankruptcy happen? And it's very slowly and then all at once. It's one of those things.
Yeah.
It's like, well, how did that lose value? Well, very slowly and then all at once.
Yeah, but the weird thing is like a lot of investors, like even on a down year, they'll look at their portfolio and they'll be like, I started the year at, at 100,000. Now I'm sitting at 84,000. Why do I still have a cap gains on my tax bill? Like, why is my 1099 showing cap gains? And there could be a number of reasons, right? There could be, some reorganization that made you realize a gain mid-year. There could be a dividend that you didn't reinvest that could result in a cap gain, right? So a lot of people at the end of the year, when they look at their portfolio, they're like, okay, well, I have, on this 100,000, even though it's down to 84,000 right now, man, I gotta sell $2,000 worth of securities for a loss. I gotta realize $2,000 worth of losses to make sure I pay nothing in taxes, at least, right? So
to offset.
Yeah. So the benefit is, even if you sell more, right? So like, let's say you sold, let's say you had $2,000 of realized gain from dividends through interest payments or whatever it is. And at the same time, you sold securities that you held for a long time for a grand loss of $5,000. So, if you even that out, it comes out to $3,000 that you have in realized losses, right? So $2,000 capital gain
of real loss that exceeds your capital gain, right?
Yeah.
So you have a net carry of $3,000 loss.
Exactly.
Okay.
Yeah. Yeah. So the benefit of that is, if you do have more realized losses, if you harvested too many losses, really, if the logistical term, the benefit of that is you can use $3,000 every single year to offset ordinary income, right? So I'm assuming that I'm not a tax expert, so you're gonna have to correct me on this if I'm way off. But ordinary income, if you had a realized loss on your stock or your investments of $3,000, you can take all $3,000 and offset ordinary income. Is that correct?
Yes. Yeah.
Okay.
You can take up to $3,000
every year, right?
Every year, and any amount of cap gains loss that you have in excess of $3,000, you can actually carry forward every year until exhausted.
Exactly. So
right?
if you have $12,000,
there's no carry forward limit. And as I recall from my tax classes, there's a 7-year carry back.
Really?
Right. So you can go back 7 years.
Wow.
And in theory, change your, and amend your taxes back 7 years. But it goes both ways.
Yeah.
Right. Because you may have to go back and amend actually again the previous years. So, but tax carry loss forward is for an infinite period at a cap of $3,000 a year against ordinary income. You also have to make a determination between short-term and long-term capital gains. So short-term capital gains are any capital gains that are, or any securities or any other.
Short-term is ordinary income, right? And then
is less than a year. Short-term is considered ordinary income, and it's based on something that's held for less than a year. Yeah. Anything held for more than a year is considered long-term. And then cap gains is taxed, therefore, long-term capital gains are at a preferential rate. Short-term capital gains are at the ordinary income rate.
Which so
and then
the two tax rates are cap gain rates are obviously much more favorable than ordinary income. So
they cap at 20%. Yeah. Right. Yeah. Whereas income caps at 44.7% was the last I looked.
I think that's the highest bracket.
It's the highest bracket, right?
That's
But remember, long-term capital gains are at 0, 15, 20, right? So that's great.
Yeah.
Which includes dividend or qualifying dividends.
Oh yeah, that's the thing. That's the other thing too about qualified and non-qualified dividends. But I mean, I don't want to get too deep into that.
We don't want to dig into that one this week. I think we've talked about dividends in the past, so we can go find the old dividing episode.
Yeah.
So there's another thing in tax very specifically you have to watch out for, which is to say, like, it's essentially called a wash sale.
Yeah, so I was going to say, okay, thank God. I was going to say.
Which is to say that if I were to say I sold all my I sold all my Tesla because it's down bad. And I had some huge gains everywhere else that I just need to offset. I don't want to pay taxes right now because I sold some huge winners, took the cash, plowed them back into other winners that have been making me huge amounts of wealth, not money yet, because I haven't realized it. I need to offset that because I don't have the liquidity to pay the tax. All right, I'm going to sell. I'm going to sell my Tesla shares. I'm going to
realize some losses.
Take that cash. I'm going to realize my loss. Keep that liquidity with me, right? I still, but the government's going to look at it and they're going to go, oh, well, you had these huge winners, and you had this big loser.
But the caveat,
because they offset, you still have money. That's fine. Yeah. But you lost money. But the caveat, it's washed. I now don't have to pay taxes.
But the caveat is if you buy back Tesla stock within the next 30 days, you can't.
Then it's as if I can't do it. I can't do it and claim the loss because the government's now saying well, you recognized the loss, but then you plowed right back into the position.
So
So
we don't
why would
believe,
we?
Yeah.
So we don't believe that this was a legitimate sale. This isn't a real loss.
This is
You
a
have
trade,
not actually.
Yeah.
You traded to gain a loss and then went back into it. So you have to wait.
You have to wait.
You have to wait.
Doesn't mean you can't
30
buy
days.
something else, right? You can sell your
Um,
Tesla, buy something else.
Absolutely.
You can buy,
and it doesn't mean you can't buy back a portion of your Tesla.
yeah.
But each bit of Tesla you buy back into
You have to.
is an amount you have to take away from your
it's considered-
your loss. From
Yeah, it's
your- from
considered
your
a
real
wash
loss.
sale. So, but it's only for a loss, right? So if you sell Tesla for a gain and you buy back into Tesla, there's no wash sale for a cap gain. It's just it's only for losses, right? So
No, this is
so-
specific. This is specifically to prevent me from sitting there on the last trading day of the year, selling my losers
Yeah.
at 9 a.m. and buying them back at 3:30.
Yeah.
Right.
It's yeah,
and then the next year being like, no, I sold for a
So-
loss. And then it's like, but you bought back.
yeah. So that's the thing.
And
That's
your ownership position is not.
yeah, and
is not
usually
changed.
like just for retail investors, just an FYI, if you want to realize a loss for a year, you have to give it 2 trading days before the end of the year because trade settlement, right? T+2. So if the last trading day is the 30th, you have to sell it on the 28th before you can realize it for 2022, or I guess for that year, right? And then the other thing you got to watch out for is even in January, right? If you buy the stock back that you just sold for a loss, so if in James's case, you sold Tesla on the 28th of December, and if you bought it back on the 17th of January, well, guess what? They're gonna redo your
I didn't
1099.
sell Tesla.
Yeah, they're gonna redo your 1099, send it to you, and say, "Hey, this is your new 1099." Sorry,
This is amended. You never sold your Tesla, so I
Yeah.
hope. Well, if it's still that early in January, you haven't started your taxes. You haven't filed and submitted your taxes yet. But yeah, it won't fly.
Yeah, so just be weary of that. Like
Um,
wash sales are first of all, if you see your wash, like if you look at your brokerage account and you look at your cost basis like that, the wash sale will always throw off your cost basis. So just be weary of that. It's mainly just a wash sale rule. Odds are it's calculated correctly. Granted, sometimes it's not because sometimes the software systems for brokerage accounts might not be on the hop with that stuff. So just be wary of that, right? Like if you do want to realize a loss, you got to sell it. You got to wait 30 days. Doesn't mean you can't buy something else, right? So if you sell Tesla and you're like, well, I still want to speculate in EV, so I'll buy, I don't know, Lucid Motors or whatever. You can still do that. You just can't buy back into Tesla.
Yeah. There's also one other thing about wash sales, which is to say that you can't. It's actually a 61-day window.
Because it's before, which I don't
it's also-
understand.
It's 30 days before and after. And okay, so here's why, and here's what you'll enjoy this. You're an options guy.
Yes, I am.
What
Very
essentially
much
it
so.
says is that I'm not allowed to, within 30 days of a sale of my shares, create an option that allows me to buy it back. That's what they're trying to prevent me from doing.
I mean, it's really rare that it
Right,
it happens
so-
before, but it can, right? Because if you bring in
Exactly.
well,
Well, if I sit here 30 days before I sell and I go, okay, I want to buy this back in 2 months, I'll create a security
They give you the
I'll create an option that allows me to buy back, that gives me the ability to buy back
at a similar cost basis, yeah,
at a similar cost
You know,
basis. And then in 30 days I sell so that no one looks at my option in that. And then in 30 days it expires. Or 30 days, I can exercise my options and be back in my original position, but with a tax loss on the books. The government's going, yeah, you can't actually do that in that 61 day window. You can't set yourself up to buy back, and you
Yeah.
can't actually buy back.
Yeah, so it's weird,
and
but it also affects like if you shorted the stock too, right? If you shorted it, covered for a loss, and then
you may not have any securities or options, or buy a substantially. I think the language specifically says that you may not buy. The wash sale rule will disallow any tax losses if you buy the same security, a contract or option to buy said security, or a substantially identical security within 30 days before or after the date of sale. So in that 61-day window, you can't.
Like, so wash like when it comes to options, just to clear things up too. Like so, if you buy a 50 strike call, sell it for a loss, and then buy a 49 strike call, that's not the same. You will not have a wash sale in that scenario. But if you buy, I'm assuming
options. It's no options. You actually have to
for just the option
to disgorge the security at some point.
for just the option.
In order for a wash sale to begin.
For just the option, it has to be the same exact strike and call or put, right? But like if you, I think that's more so like if you buy Google Class A, sell it for a loss, and then buy Google Class B right after that. I'm assuming, or excuse me, Google Class C. I'm assuming that also would be a wash sale, but I don't know for sure.
As it's written, it's very specifically saying that I cannot, within that 61-day window, I cannot, prior to the sale of my security, enter into a contract to buy my security back at exactly the same price I sell it for. Right. So essentially it's me saying like, it's that whole, it's prevention of me being like, me selling to you and being like, I'll buy it back from you in a month.
Yeah.
At the same price. Like, you hold it for me.
But I still control it.
While I take my tax
I still control the
loss,
stock, right? Because I have the option to buy it, right? Or short it or whatever it is. And I think, so I know this.
It's this whole
the 30 days before you sell it, I know has to do with, a lot of it has to do with an option, or if you shorted and reversed, right? Or went long and reversed and then went back and then reversed again or something like that. But
absolutely. It's to prevent you from trying to take a tax gain off of making a somewhat complex financial position.
Yeah,
to
exactly.
try and manipulate in that hope. So that's exactly right. That's how wash sales work. But tax loss harvesting, right? So
I know it's kind of convoluted. If you have any more questions, feel free to reach out.
Yeah, it's essentially you have a loser on your books, you want to get rid of it, or you buy something you expect to go down, with the understanding that you will sell it before the end of the year to offset any gains you have.
A gain in something else, yeah.
A capital gain in something else, because you just don't want to pay taxes, and it's fine. It's fine. It's and if you're the thing is you have to buy a loser and you have to hold the loss.
Yeah,
like it's if that's what you want to do.
Yeah, if you have the opportunity to harvest some losses, like that means you probably there's no easy way to say this. Like, you probably made a bad investment decision, and it's okay. Everybody does, right? I mean, Bill Ackman makes bad financial decisions, right? Remember, he shorted Herbalife. Like, that didn't go very well for him. Like, I'm just saying, like, it's okay, right? It's, these things happen, and you have to, if you have to harvest some losses, this is just something that this is a rule out there that you can use to take advantage of offsetting some capital gains.
Yeah, the easiest way I describe the entire premise of tax loss harvesting is either you got your timing wrong, or you bought bought into something that did not do that underperformed for you. Either because you just made a mistake in your analysis when you bought, or mismanagement, or just shifts in demand. The whole world of supply there's the whole world of economic shocks, as well as human nature that make things change.
Yeah, well, a lot of people believed in the last Disney CEO, right? I mean, just an example, right? I'm not trying to get into that rabbit hole, but I'm just saying a lot of people believed in the last Disney CEO. Let's look how that worked out. I'm just saying,
and because the last Disney CEO is back.
Exactly. So real quick, I know I want to wrap up talking about the petrodollar, just because I just want to get the ball rolling on the story. We're 9 months late of the story, because I know the story really started back in like April or March of last year.
Well, they've been talking about negotiations and stuff they've been talking about to try and end the petro. Well, certain parties want to end the petrodollar. Let's put it that way.
Honestly, like, ending the petro, like, let's not get, like, they're saying, I know you're not saying it, I'm just saying they're saying end the petrodollar.
I am not.
Right? That's a little dramatic, right? I don't know. this is not something that's of concern yet. Could it be of concern? Yeah, I mean, if you really want to put on your conspiracy horns, like, it's definitely something that should be concerning to you if you have that conspiracy theory hat on.
Well, I will say this, my aluminum foil lined hat is not on at this point. I'll say this, there are parties that want to end the petrodollar. There's no conspiracy. There is conspiracy, but it's not a theory.
That's 100% true. And I think that party has actually gotten bigger, I think, in the last year.
Well, they have legitimate economic reasons for wanting to do so.
Right.
It's not like it's like, oh, they're all doing it just to like hurt you. They have legitimate reasons.
Certain parties are doing it to hurt America.
The main party is doing it out of self-interest,
which is
China.
I think they're doing it. I think they're doing it to spite America too. I'll just be honest with you.
But when self-interest and spiting America
are in line with each other,
they can do both, as Erica, my partner, frequently says to me, "Por qué no los dos? Why not both?"
Yes, why not both? Exactly. So that's I think that's what China is doing. But I'm just saying. So petrodollar. What is the petrodollar? Essentially, if you had to buy oil from Saudi Arabia in the last 50, I think, years. Was it 50 years?
No, well, it's that it's very simply that almost all the crude oil traded around the world is traded in dollars.
Yeah,
okay, so it's the value of oil denominated in U.S. currency.
But it's been around for like 50 years, right? I'm still stuck on that. I'm sorry. I'm pretty sure.
I think
it's been around since the 70s. So
I want to say it is 72 or 73.
But no, I'm saying like it's not only has it been around for 50 years, but it's been like the thing for 50 years, right? Like everybody's bought oil in the US dollar for 50 years.
Everyone's been buying oil, yeah.
And like it kind of makes sense, right? Like, like at the beginning
for the last 50 years, the US dollar has been the dominant global currency. So of course why would you trade in anything else?
Like at the beginning of every episode that we do, or every presentation that we do, like, in that little intro, it says, we say like $5 trillion.
You may or may not skip.
Yeah, which I don't blame you if you do. But we say like,
But one person did ask.
But like, so we talk about, so $5 trillion exchanges hands every single day, which that figure is more like 6 trillion now. But regardless, $6 trillion changes hands every single day. And when we say $6 trillion exchanges hands, we mean globally, right? So globally, $6 trillion changes hands every single day. 80% of that, around 80% of that is in US dollars.
Yeah.
Right.
Because remember, if you go back and you listen to our currencies episode, right? So currencies are traded just like any other security because they are. They really are just any other security, except they have limitations. They're not shares in that you're buying the right to a portion of future profits. It's a means to purchase commodities or goods or services in the country from which they originate.
That's all it is. Yeah. So but if you have to buy oil in $1 in a US dollar, and let's say you're in Australia or you're in China or you're in India, right? So, you're sitting on a bunch of, usually a lot of other countries sit on a ton of US dollar reserves. They kind of have to extract from those reserves, or, if they want to preserve buying power from those reserves, what they do is they buy US government debt, which is why US government it owes a lot of money around the world. Right.
That's not the only reason, but yes.
I mean, of course not. Yeah, but that's a reason, right? But a lot of countries will extract dollars from their reserves and then they'll buy oil with it. Or if they don't have enough dollars, what they'll do is they'll exchange their currency for the US dollar, buy oil. And, for the longest time, it's been something that has kind of kept the dollar as strong as it's been. It's, it's kind of weird to say.
It's kept demand up.
Yeah.
It keeps demand for the dollar high.
Yeah, but the demand for it also, like, gives the dollar its strength, and also it reduces dollar inflation, right? So if all of a sudden there's no demand for the dollar, think about what that would do. I mean, the Fed couldn't raise rates fast enough to solve that. You know what I mean?
It would be it would not be particularly interesting to see. I would not want to be present for said
which is why like if the petrodollar
and to be fair, no one else in the world would either, because they would all crash too, very quickly,
insanely fast, just because they're holding US dollar debt, right? They're getting paid back in US dollars at a later date if dollar currency inflates like crazy.
Well, and
too bad for them.
And most importantly, if you're China, you're selling to US customers.
So you're getting paid in a currency that has weakening buying power. Oof, not a good place to be in, right? Just saying. So, I mean, that's kind of the story of the petrodollar, right? It's something that's fascinating. I mean, like China, like the reason why I bring it up is because President Xi met with the people in Saudi Arabia. I think they're trying to get the petro yuan. They're trying to make that a thing. Or I mean, I think it is a thing, but they're trying to make it so that
they're trying to make a competitive so they can buy in their own currency and not have to trade in US dollars. And there's and that's their self-interest, right? So this is their self-interest. Now, the Russians would also like that because then they don't have to use US dollars. They can work through the Chinese state banks and Chinese central bank, which that they moved a lot of yuan denominated currency. And they want that. And so that's another...
But the weird thing about Russia wanting that too is like, okay, so Russia, no one can buy oil from Russia anymore, right? No one of significance can really buy oil from Russia except for China and except for India. And Russia, their reserve capacity is nothing to be, it's nothing to be threatened by, right? Their reserve capacity is tiny.
Well, their ability to... It's not necessarily their ability to extract oil and natural gas. It's their ability to... It's their ability to use their proven reserves, which they can't actively do that. They're years away from being able to tap most of it, but also their ability to then get it to point B is also severely lacking.
Well, I guess what I mean too is like Russia's, I guess their storage capacity is also really weak too. So they need to get oil off their hands. Otherwise they got to stop production because they can't, their storage capacity sucks.
And as we learned in 2020, stopping production, not a great plan.
No, exactly. So usually like if China decides that they're going to get their oil from Saudi Arabia, and I think the last deal was around like $60 billion worth of oil from Saudi Arabia. That means $60 billion of oil they don't need to get from Russia, which means Russia has got to find a new customer Maybe I don't know. Maybe
Well, and
China still says, "Hey, we'll still buy oil." You know.
Well, what we always said about Russia from February of last year on, which is weird to have to say, is that when Russia decided it was going to cut off energy supplies to Europe, there weren't enough other customers to absorb that at the price Europe was paying. No, so it's like you're not making more money, you're losing money, and you're not selling everything. So it's one of those things where it's like, that was dumb. I mean, and this is just ignoring the human cost. If we just look at if there was no war, if it was just a business decision of I'm not going to sell to you, I'm going to sell to these guys. It's like, well, that was stupid, and because you're making less money. And then when you add all the other factors, it stops being stupid and it becomes, what's wrong with you? Yeah, it's like that person that you meet. You're just like, dude, why are you? We all know that one person. We're just like, what is wrong with you? Like you like, why are you this?
Like, why do you look at my forehead when I'm talking to you? It's like, I don't know. I'm just making stuff up, right?
Yeah, like why would you push that cat off the wall and then kick an old lady's purse over? What is wrong with you? It's like fundamentally none of this
makes sense as to like how you should operate as a human being. But then again, it's Russia, right? And they want to do business with India instead of Europe, which all right, it's your choice.
It is a strategy.
All right, fine. Godspeed to you. But anyways, I just wanted to bring up the petrodollar because I feel like it's a fascinating story. I think it's something to pay attention to.
It is.
Like throughout the year, just because we don't I don't want the petrodollar to be weakened. And we'll see what happens.
What I'll say is this: I don't see it being challenged by the petro yuan this year or for the next year while. And I'll base it on kind of two things: China entered a zero COVID policy with no exit plan, which is kind of like the U.S. and Vietnam. It was a bad idea, and it didn't get better when they decided to just stop. The next one is they just stopped, which that's not good. I mean, I put an article and I saw an article on Financial Times that has like they're showing something like 250 million like new cases of COVID. And I'm like, well, that's a really great way to kill an aging population when you don't have a replacement rate and you don't have a vaccine that works.
Especially the second part. Like they don't have,
but here's a really big one. And this is kind of the big one where I'm like, oh, the petro yuan is probably not going to happen because there's certainly some instability there economically in China. Yeah. What we talked about how they closed for Lunar New Year. They're not going to reopen until they close December 21st. They're not going to reopen until January 21st. So a whole month closed. Yeah. But here's the big one. And this is one that's kind of surprising. Xi Jinping actually admitted that there are divisions within China.
Wow. Okay.
The other day.
So he actually did see that there are protests all over.
He has admitted that there are problems.
So he's not completely blind. Okay,
so
cool.
This is the thing. With China, we always have to, with China, with Russia, with any autocratic or strongman nation, you always have to look at one of two. You have to look at one thing. If they're saying something good happened, it's overstated. If they're saying something bad happened, it's understated. And if it's just really close to the line, if they're giving good news, grain of salt. Ratchet that down. Yeah. If they're giving bad news, they've sugared it up. Ratchet up the pain, right? Ratchet up the pain on that. So he says, "Oh, there's a few divisions." No, Xi,
plenty.
There's big divisions.
It's drastic. Yeah.
Oh, Russia says, only 82 soldiers were killed at the technical college in in occupied Ukraine where they were barracking. That number needs to go up, right? So
but also, like, the thing is, the reason why I bring it up is because I do think maybe other countries might get on board, right? But it's still like the petrodollar is so much. I mean, they do so much more business in the U.S. dollar than any other currency combined. So it's still like if the petro yuan does threaten the U.S. dollar, it's gonna take a long time. But I don't necessarily think that President Xi
again, Saudi Arabia's problem does lie just across the Gulf, the Persian Gulf,
or
in Iran. If Iran is able to, like I said, okay, tinfoil hat's now on.
Okay, here we go.
If Iran re-enters the global economic community in a Republican or Democratic sense, and is trading and is able to actively trade with the Western world, that will strongly undermine Saudi Arabia's position.
Yeah.
Here's the next one. If Venezuela were to re-enter
that would be huge.
The global economy from a perspective with the U.S., with the rest of it, if they were to have a normalized economic relationship with the rest of the world, I mean, that would just absolutely I mean, really smack down Saudi Arabia's position, because Venezuela has, we discussed some of the largest proven oil reserves in the world.
Yeah.
And they are not that far from the U.S. Right. So it is cheaper. It will be cheaper to.
I mean, but I'm just saying, like, because we all know how much investing China has been doing in emerging markets. So I think maybe. I don't know. I think China has been dying to take over the dollar. They've been trying to subtly declare a currency war against the U.S., but they don't want to do it all at once, because if they did, they know that it'd be worse for them. And right,
absolutely.
But I'm just saying, like,
what I will say is, this: if you want to learn more about tax loss harvesting, go ahead and watch Back to School. With Rodney Dangerfield.
Oh my God.
In the opening few minutes of that movie, he literally, like, one of the best scenes is he's talking about, like, you know what? No, sell that, take the loss, we'll call up the capital gain, and we'll be good. And it is one of the easiest explanations, one of the best explanations. It's just that fast of what tax loss harvesting is. But more importantly, and this is to do with the petrodollar versus the petro yuan. I'm not saying you can't buy Drunkenomics merchandise with the yuan, but I am saying it's a hell of a lot easier with the dollar.
Yeah,
and
exactly. And you can find that at drunkenomics.myspreadshop.com. Is that right?
Absolutely. And there you can find all our new merch. Right, that's that new swag that we finally got out. Sorry it was late, but we got it out in December. I know it wasn't really there in time for Christmas, but it is there in time for the New Year, so you can ring in 2023. Show everyone that you are a drinkonomist or an economic. You can just prove it. You're gonna have golf shirts. We've got hoodies in black, and black,
and darker black.
Exactly. But most critically, we heard you. We listened. We did our best. I am 90% sure I put a bit of our swag on every single metal pint glass they had for sale, so you too can drink. And here's my thing. You guys jump in the Discord and you tell me you want it in to-go travel coffee mugs, and I'll do it. But even I felt a little leery about that. So I don't think I did.
Don't feel bad about it.
You can always.
But additionally, I mean, real quick, if you want to put a tip in the tip jar, we really appreciate it. We appreciate the merch support as well. But if you want to throw a tip in the tip jar, go to patreon.com/drunkenomics. That's patreon.com/drunkenomics. You can help us keep the liquor cabinet stocked, the fruit fresh and peeled, the ice cubes cold, whatever else there is.
Keep the ice cold, the beer chilled, and
exactly.
And us smirking.
And last but not least, as we ring in the new year, please remember, I guess we should start off by saying, I watched Monday Night Football. That was tragic. Prayers up for Damar Hamlin. Seriously, that really shook me. I mean, I couldn't sleep at all on Monday. But so prayers up for him.
It was rough.
Yeah, I wanted to give a quick shout out to him because that shook pretty good. But also, please play Chestnut Checkers. Remember to fill and kill. And last but not least, remember to do that one thing. What was that again? Always.
Well, it's when you're done just saying and not bragging. You just got to keep it drunkenomical, guys. Stay drunkenomical, y'all.
There it is. Cheers.